Hello everyone, thanks for joining us this Saturday morning and welcome to this educational presentation of how to fine-tune your entries with the confirmation method. Now the confirmation method is just that. It's not a strategy, it's not a system, but what it is just a method that you can apply to your current trading strategy or system regardless of what it's based on or what defines your entries and exit points. It's something that I feel that really increase your odds for consistency just by adding this small factor, and I'll show you how you can apply it on our platform where it's automatically displayed for you. For example, let's look at this generic chart here. Let's say that you're interested in this and you think that there's some major support right here, and this is where you want to buy. Now it gets to that point and you actually buy, but it goes down a little bit. Well, with the confirmation method I'm going to be teaching you today, you could have entered, but you would not have lost any money. Even though you had bought here, you still would not have lost any money, even with the point of it going down further and further. And once again, this confirmation method is automatically displayed on our new PTS Primo Charting platform. This is the educational portal that automatically fine-tunes your entries. So this is going to be a great educational presentation today. Thanks for joining us on this Saturday morning. My name is Steven Primo. I'm the president and founder of Specialist Trading. If you're new to my Saturday webinars, we are all about educating you. That's the sole purpose behind our webinars and behind my website. I teamed up with Pro Trader Strategies about 10 years ago with one goal, and that's simply to educate traders. And now we have students in over 115 countries around the world and in virtually every state of the United States that are learning and actually applying our methods and techniques and strategies. Now, I've been trading for a total of 42 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist trading. That's where we get the name specialist trading, because a specialist is someone who made markets on the trading floor. So if you wanted to buy or sell a particular stock or equity, you had to go up to the trader who specialized in making a market. So I made markets in IBM at a time, also in waste management and in US Air. I made markets during the crash of '87 and the bull market that followed. And I left the floor in the mid-90s to teach and to also trade and have trading accounts for other individuals and firms. So I've been, around just about every environment you can think of. I've traded straight up, straight down markets. I've traded, any different type of markets, currency pairs, futures, stocks. So in my 42 years, I really have seen it all and traded just about everything. So I know it works. You don't have to waste your time searching for the Holy Grail when you can come to Specialist Trading and Pro Trader Strategies and learn our techniques that have stood the test of time. So today I'll show you how much attention we give to actually trying to educate you in today's presentation. But remember, as always, we are always required by law to share this with you first. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using the confirmation technique today, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember that all examples today are strictly for educational purposes only. So as you're taking a brief moment to view our required disclaimer, I would also like to take this time, if you haven't done so already, follow us on Twitter. I post different information on a daily basis, anywhere from signals our strategies have generated to little bits of financial wisdom. Lots of great free information, educational information, so feel free to follow us on Twitter. Now, once again, if you're new to my webinars, we're a little bit different in that the fact that we're only trying to educate you. That's our sole purpose. We don't promise to have the most outlandish system or strategy that never fails or hasn't produced a loss in the last 10 years. We don't believe in that. What we want to do is simply educate you and supply you with techniques and strategies that have stood the test of time. And then we work with you so that ultimately you can be in charge of your own decision-making process. In my 42 years, I have found that that's the only way. The only way one becomes consistent, not by following someone else and going to their site to find out what to buy or sell the next day. We don't believe in that. We simply want to educate you so that ultimately you can make your own trading decisions. Now, this is the same way I was taught some 42 years ago, and what I believe has been able to sustain me for 4 decades. And so hopefully it will be able to do the same for you. So this is going to be a great educational presentation. I want to take all your questions, but once again, if you're new to my Saturday webinars, I like to take the questions at the end. So if you have a question, please wait. I promise I'll get to each and every one of them. Probably in the next half hour we'll conclude, and then I'll reserve the last portion for any questions you may have. Now, the only question I will answer is this being recorded? Yes, it is. So don't worry if you're having technical issues or if you have to leave early. I will supply each and every one of you with a link to this recording, okay? So once again, if you happen to join us late, we have a good crowd here this Saturday morning. Please wait till the end of class to ask any questions. All right, with that stated, let us begin today's educational class. And we're going to be talking about what I learned on the trading floor of the exchange. Remember, when I first started out some 42 years ago, I was privy to all this, at the time, so-called advanced information. I knew where the institutions were entering orders in my book. I had a computer with charts on it. Remember, this was in the 70s and 80s. There weren't any charting platforms yet for the public. There was no such thing as the internet. I subscribed to all the newsletters. There weren't any chat rooms or trading rooms, but I subscribed to all the trading gurus. And guess what? Nothing was working. And it wasn't so much that my techniques or my strategies weren't sound. It was just that my entries were based on the wrong information. Many times you can have a strategy or a method that actually is okay. It's just that your entry is faulty. And it's really based on what you are, basing your entries off of. It's not so much that your strategy or technique is wrong. So many, traders throw in the towel on a method or a technique thinking that it doesn't work. It's just that your entry is faulty. So here's what I learned on the trading floor of the exchange from my mentors. They said, Steve, what you need is a clear-cut plan for entry that's based on what the chart is telling you and not what an outside source is telling you. You see, I used to listen to all the trading gurus and they tell me where to enter and where to buy or where to sell, or they, I'd wait for the technical, indicators to line up, and once they crossed over, then that was telling me when to buy or when to enter, or I'd wait for some newsletter at the time to tell me when to buy, and that wasn't based on what the market or the chart in front of me was telling me. It was based on what an outside source, either someone or some indicator, was telling me. So this is what the confirmation method is. It's based on what the chart in front of you is telling you. All right. Now, remember, this is just a method. I think when I've done this presentation before in the past, and when I've taught it to my students, the number one difficulty is that they think the confirmation method is an actual method for trading, like it's a system or a strategy. It's not that. It's just a method for entry. It's a way to fine-tune your entry, and since it's a method, it can be altered to meet your standards. So don't think that this is just one way to trade it and that's an actual strategy, okay? So let me share with you what the confirmation method is. It's the verification that the trend has resumed in your desired direction. This is your signal to enter the trade. The specialist always waits for his trade to be confirmed before entry. Okay, so what we're really trying to do is just confirm that the trend has resumed. In other words, how many times have you bought something when it's going straight down because you think, well, it's the bottom, right? Based on some support or some Fibonacci support level or something where the institutions are buying, and you're really, standing in the opposite direction of the trend. What you want to do is wait for it to go back up before you enter if you're buying. And conversely, if you're selling, you want to wait for it to go lower. That's your confirmation that the trend has resumed. So how do we do this? Well, let's share with you the rules for going long using the confirmation method. And remember, this is a little bit wordy. It's going to seem a little confusing at first, but I'll show you a lot of examples and show you how simple it is. And this is a method that can be altered or edited to meet your style. Let's say you get a buy signal. I don't care what it's based off of. It could be based off news, could be based off of indicators, could be based off the tides of the ocean. It makes absolutely no difference. But after an entry signal has been given, you should only buy once price trades 1 to 2 ticks if you're purchasing stocks or futures, or 1 to 2 pips if you're trading currency pairs above the original entry bar. So in other words, when all the requirements, when all the rules come into play with whatever method you're trading, rather than just simply buy at the market or place a limit somewhere, wait for it to trade above that bar, whether it's a 5-minute bar or a daily or a weekly bar. It makes no difference. Now, here's where you can alter it, because if entry does not take place on the second bar, in other words, if it does not trade above there, well, then you can do 2 things. You may continue this process with each preceding bar. In other words, just track it all the way down until you finally get filled, as long as the setup of your strategy is still valid. or until the order is filled, or you want to cancel it and you're not interested in it. In other words, let me show you what this looks like here on a generic chart. Let's say you're following this generic stock future currency pair. We're not going to show you the time frame or what it is, because it really doesn't matter. I don't want you to think that it's only on one specific market or time frame. It actually makes no difference. But you're tracking this, you're interested in buying this, and all of a sudden it takes off. All right, so you wait for some confirmation. Let's say your strategy says, okay, this is an actual buy signal, so you want to buy right here because you think it's going to really keep going, okay? And then if you were using the confirmation method, you wouldn't just simply buy once all the requirements come into play. You would buy only if it trades 1 to 2 ticks above. If this were a currency pair, it'd be 1 to 2, 3 pips above. Now, this isn't a rule written in stone. Some of our students like to wait for 10 ticks or 10 pips. Others like to wait for just 1. It's up to you. This is, remember, your decision. You're in charge of your trading, not us. We're just teaching you high probability ways to fine-tune your entry. All right, so you're only going to buy on the next bar if it trades just above here. And look what happened on the next bar. Well, it never traded there. So you have a choice. You can either say, well, you know what? I'll keep this entry point alive here at this top level, or I'll just drag it down for the next bar. So now I'll enter at a lower price, and then a lower price, and a lower price. You see how this works? You can either cancel the order if it never trades at this point, or you can say, I'm going to keep, dragging it down and keep watching as each preceding bar continues until I get filled or until I cancel the order. It's entirely up to you. But remember, the confirmation method is not designed to have you buying at the bottom or selling at the top. It's really designed to not have you in a trade, and the minute you get into the trade, it goes the opposite direction, right? That's probably the worst feeling in the world for traders. How many times have you bought something and the minute you buy it, it goes lower? Or the minute you sell something thinking it's going to really fall out of bed and go down, it goes higher. Well, that's the worst experience for traders, because then you start to second guess or doubt your strategy or your method. You start to think, well, gosh, should I really be in this? Maybe I'll just stop myself out and just wait. And then usually that's what you do. You throw in the towel, when at that moment, that's actually when you should be purchasing. Because if we follow and use our confirmation method and track it all the way down, you see you would have actually bought right here. But let's say if you had purchased where you originally wanted to right here and you had to sustain 2 or 3 down days, you most likely would have thrown in the towel and said, this is not going to work. I'm going to get out. Well, that's most of the time, not guaranteed, but many times, the exact point where you actually should have gotten in, because you would have entered right here. You would have bought on confirmation. And then look what would have happened after that. So see, it really wasn't your method that was faulty. Your strategy was actually picking a winner. It was just your entry. So this is what we mean by confirming. Now remember, this can be altered. This is one way to use it, where you just continue to track each and every bar all the way down. Or you could say, a lot of our students say, well, I'm only going to use it for 1 bar, and if it doesn't happen on the next bar, I'm out. Or a lot of students would just say, well, I'm going to keep this as my original entry point, and once it comes back up to here, that's where I enter. There's a number of ways in which to apply it. That's why we say this is a method. Now, conversely, it's the same rules to going short. We're just going to turn it upside down. I'm not going to read these rules over again. I'm going to show you that example, a generic example, just for going short. So let's say we're looking at this generic chart. Once again, it makes no difference what this is. And you have been watching this because you want to short it. Now it looks as if it's really going to go down, but you want it to break this support here. Let's say your strategy likes to follow, basic support and resistance. And this is some major support going back months. And you think if we break this, this is where you want to sell it. And look what happens on the next bar. Now, normally you'd say, okay, following my rules of my strategy, this is where I've done the research and I should be selling right here. Well, that's okay, because it's not saying that you have a bad idea, but maybe your entry is faulty. Maybe you shouldn't be selling right there on that breakdown. So you want to use the confirmation method. So rather than just sell, you want to wait and confirm that it trades 1 or 2 ticks, maybe 10 ticks, maybe a half a point. It's up to you, or maybe 5 or 10 pips if this was a currency pair. But you want to confirm that it's going to trade below that level, because look what happened. If you had sold right here thinking that that's major breakdown, look what happened. Well, it didn't break down. In fact, the next bar it went a little higher. So you could use the confirmation to track it and raise your level of entry up a little bit until you eventually are going to be entering right here, because this is where the confirmation was that we went below the previous bar. Remember, if you had sold originally right here, you would have had to sit the 3 or 4 days where it went entirely against you. And this is the main purpose of the confirmation method. It's just to fine-tune your entry so that you don't have to sit holding on to a losing position, because that's the worst thing that can go through a trader's mind. If you're holding on to a losing position either for a couple of hours or even a couple of days, it starts to play with your mind and you start to second guess and think, you know, maybe I made the wrong decision, I should get out. So with this, you're still tracking in order to get short, but you haven't entered yet until right here. And then look what happens after that. So you had the right idea all along. It was just that your entry was faulty, okay? So this is the purpose of the confirmation method, so that you don't have to sit through those, 3 or 4 days where you're wondering if you did the wrong thing or not. And then a lot of times you'll stop yourself out or you'll exit and say to yourself, well, I'm not going to take a huge loss here. I better get out right now before it turns into a huge loss. And oftentimes, that's the very point of where you actually should have been entering. Now, the purpose of waiting for confirmation is not only to get us in at the beginning of the trend when the trend has been confirmed in our direction, but it's also to keep us out of bad trades as well. So there's an extra added little advantage to using the confirmation method. Remember that first example we showed you at the beginning of the presentation where, let's say you had based this off of this major support, and if we touched here, you wanted to buy it. Well, this is where you would buy without confirmation. And as you can see, it went down and closed at the low end that day, all right? What if we had said, well, we're going to use the confirmation method? Well, we would have only bought 1 tick above that bar. We're not going to try and pick a low or pick a top if we're selling. Remember, the confirmation method is not designed to get you in at the very bottom or get you, shorting at the very top. It's designed so that you can fine-tune your entry so you don't have to sit through these losing periods while waiting for the stock or the future or the currency pair to go in your direction. So the way to do that is, rather than just simply buy the way you normally do, is buy once you trade up above here. I know most students will say, but Steve, I'm going to be buying higher. That's okay. Remember, it's not about buying at the low or selling at the top. It's about being consistent. We want you to be a consistent trader so that you be trading 10, 20, 30 years down the road. And this is how you add consistency to your entries. So let's say instead of buying here, you would have only purchased 1 or 2 ticks above. Well, look what happened. If you had used the confirmation the entire time, you never would have entered because it never traded 1 tick above the previous bar. So for all intents and purposes, the best trades sometimes are the ones you never take because you don't have a loss there. So this is an extra added advantage of the confirmation method. Oftentimes, not guaranteed, once again, because nothing is guaranteed, but oftentimes it will keep you out of bad trades as well. Now here's the beauty. I know a lot of students, when they first learn this, they go, God, this is great. But then they forget to apply it. They'll use it maybe on the first bar and then they forget about it. Well, we've made this automatic on the PTS Primo Charting platform. So I'll show you exactly how to apply it. But first of all, important points to remember. This is an entry technique only, but it can also be altered to meet your strategy. In other words, a lot of our students say, I'm only going to use it for 1 bar only. And if it doesn't happen on the very next bar, I'm out. I move on to the next setup. I don't want to wait. I just want it to happen because I want to capture that momentum on the very next bar. Where a lot of students will say, well, you know what? I'll track it for maybe 3 or 4 bars. And if it doesn't happen by 3 or 4 bars, most likely the trade's not going to work out and then I'll exit. Or students will say, no, I'm just going to keep on tracking it until I enter. Okay? This may be for 2 or 3 bars. It may be for 20 bars. So there is no one right or wrong way. It's whatever makes you feel the most comfortable. Our goal is to simply increase your odds for a successful trade. But please remember, there is no guarantee for winning trades. We're just trying to increase your odds for consistency, okay? Because that's the name of the game. It's not about having a home run every once in a while, and you just you break the bank by having this one great trade. Because usually, what happens after that? Then you have a series of losses, or most likely you give everything back, right? That's what the trouble with having home run strategies, because they'll have a home run every once in a while, and then the next 10 or 20 trades, you give it all back. You don't want that. That's not a consistent trader. That's really more like a gambling mentality. A consistent trader, a real true trader, has a series of small little winners. That's what will sustain you for 10, 20, 30 years. Not a home run you have every once in a while. You want to have a series of nice winning trades. And they don't have to be big trades. They could be little ones. That's the key to consistency. So that's what we're trying to do here. We're not guaranteeing that every trade is going to be a magical winner. We're just trying to increase consistency because that's the name of the game. All right, so let's look at one of our best strategies in terms of consistency. This is strategy number 4, and we're going to apply the confirmation method. All right, we're going to show you some examples here. And these are some older charts, but it doesn't matter. It's more of the technique we're trying to teach you. Now, we're also going to show you how we've automated it on our new platform, the PTS Primo Charting platform. So there's nothing that you actually have to do anymore other than just simply track the trade by clicking on Easy Access Confirmation Tool. All right, so let's look at this older chart here. I believe this is Fossil, F-O-S-L. And as we see here, we have 2 buy signals, all right? Now, if we're using the confirmation method, this is how simple it is. You simply click on the strategy right here in the upper green strategy tab. This is the strategy that generated these 2 buy signals, and you'll get a drop-down menu. All you have to do is click on confirmation, and you'll see automatically displayed where you should be buying using the most basic form, which is just 1 tick above. Okay, and then you can decide, well, you know, once it gets there, then I'll decide if I want to buy at the market, or maybe I'll place a limit there, a stop limit or something, but it's up to you. Remember, once again, you are in charge of your trading. We're just supplying you with these high probability ways to fine-tune your entries. So as you can see in the very first example, you would not have entered. Now, if you wanted to, you could have said, well, I'm going to wait for this point, or you could have dragged it down on the next buy signal right here. Either way, you would have entered and had a nice trade. You see that? Now, if you had, let's say, bought and on the close of this day and it never went up, you may have scared yourself and said, well, you know what? It's not going the way I thought. I thought it was going to take off some news or something. So you may have exited. But using a confirmation technique, you waited for it to trade above, and then you would have ridden the trend. How about win? W-Y-N-N. Okay, this is strategy number 4, sell signal. Okay, now we're not going to focus so much on the strategy or the rules or what constitutes a sell signal. We're only interested in the entry. Because remember, this can be applied to any strategy or any technique we have. All right, once again, you click on the strategy number 4 tab, click on confirmation, and it automatically displays where you should go short. Rather than just simply sell at the market, wait for it to trade 1 tick below. 151.96, I believe. And look what would have happened. Now, you wouldn't have got 151.96 because it gapped down, but you would have gotten short right here on the opening, and you had 3 or 4 days of a nice, roughly about a 20-point gain. All right, let's look at any MEDP, okay? Here's another strategy number 4 setup. Doesn't look like much is happening here, so you say, well, how can we buy? Well, wait for confirmation. You'd simply click that on. You would have entered at 44.83 on the very next bar, and eventually the stock took off. All right, now here's a good example of how the confirmation method can keep you out of trouble. I'm going to show you some different scenarios how you could have applied it. This was an INTC. Here's the first area to go short. Strategy number 4 generated a short signal. This is why we say it's so important, especially in the beginning, to wait for price to trade 1 or 2 ticks below. Because had you just simply shorted here and said, well, this is a sell signal, I'm just going to sell at the market on the close, look what would have happened. This trade would have eventually turned into a loss. But had you waited for confirmation, you never would have gotten short because it never traded there, the next bar or the next bar or next bar. So you wait, you haven't lost anything. The confirmation method kept you out of trouble. And here's another signal, all right? Now, if you use that same technique of only waiting for it to trade at this level, you still wouldn't have entered and you would have not have lost any money. But if you use another technique, which simply is to wait right here for it to eventually come to this point, well, you would have eventually gotten short, and this probably would have resulted in a loss because most likely you would have gotten short here and then it would have continued to go higher. So this is why we always say, you know, it's up to you how you decide. In the beginning, we would suggest for you to only, you know, sell once it trades 1 tick below that setup bar, and then if it doesn't on the next bar, which is the way the standard format is for strategy number 4, well, then the trade is negated. Well, here we have the last and final sell signal, okay? So let's say you hadn't taken these 2 trades yet. And now here's another sell signal at 52.07. And guess what? You got short on the very next bar. So this is a valid entry point using the most standard or basic way to apply the confirmation method. and you have a very nice trade here. So once again, had you traded the way most systems and most strategies want you to trade, you would have shorted on the very close and lost money, shorted again, lost money. But if you used our confirmation technique, you would have had a nice trade and had one winner and not two losses and one winner. Let's look at the QQQs. Okay, we can apply this to ETFs based off of indices, based off the Nasdaq, or you could use this as a market trending tool. In other words, if you didn't want to trade the QQQs, but you wanted to use it to identify what you thought the market was going to do. So let's say you think there should be a rally in the markets. You're not going to really trade the QQQs, but you're going to wait for it to be confirmed. So once again, as you saw the QQQs trade above here, if you did not actually trade it, this could be just a signal saying, well, it looks like the market's going to have a nice upward move. And you could have purchased maybe a stock that made up the index, the NASDAQ index. Or if you were trading the QQQs, or maybe you bought some calls, you would have gone long on the very next day and look at the nice upward move you had. So there's different ways to use this. A lot of our students like to apply this for ETFs or for indices to tell them what they think the markets are going to be doing. Here's another example in IBM, okay? If we shorted IBM, we want to wait for it to trade one tick below. There's our confirmation. And someone said, well, Steve, I would have, if I sold this, I would have maybe placed a limit right here and I would have gotten short the next day at a higher price. Remember, we are not concerned with getting the best possible price for entries. We're not concerned with selling at the top or buying at the bottom. If you happen to do so, that's great. But all we're concerned is not having you wait around in a trade for 3 or 4 days for it to go in your direction. Because most of the time you'll exit thinking that you have a loss. We want to enter a trade. Isn't that the greatest feeling in the world? The minute you enter a trade, either long or short, and the next day or the next tick, it goes in your direction, right? Because that makes you confident and you feel like, gosh, this is great. The minute I get in, it goes the direction I want it to go. That's what the confirmation method is designed to do, not designed to get you in at the top or the bottom. So if you had said, well, Steve, I wanted to place a limit right here and I missed it, that's okay. Because once you entered, you still have a very, very nice profit here because you waited for it to be confirmed. Remember, the trend direction is everything, not picking the high or picking the low. So let's review the confirmation method. Remember, as my mentors taught me, listen only to what the stock is telling you. Don't base it off of some guy who's talking in a chat room or some trading guru who says you should buy here at this point. This is a major, major support. I mean, you know, that once again is what the entire industry is based off of, you listening to someone tell you what to do. And that, in my opinion, is why 85% of all traders fail, is because you've taken yourself out of the game. Once you learn these things, you can make your own decisions. You can make your own decision as to how you want to apply the confirmation method. You can make your own decision as to how you want to enter. And in my opinion, this is what will make you a consistent trader, not by silently, following along what someone else does. And that's a recipe for disaster in my book. Remember, if you're going long, whatever your strategy is based off, in today's session, we're not concerned about teaching you one of our methods. We're only telling you an entry technique that you can apply to any method. I don't care if it's another webinar that you purchased this method from. I don't care if it's another educator. But once a buy signal is generated, only buy above the previous bar's high or the signal bar's high, okay? You'll have a greater level of consistency. If your strategy or method, whatever it's based off of, generates a sell signal, don't sell at the market or don't place a limit. Only sell once price trades below the setup bar or the previous bar's low. Remember, you can track it as for as long as you want, or you can only use it for 1 bar or 2 bars. It's entirely up to you. The confirmation method also has another advantage in that many times, not guaranteed, but many times, it will keep you out of losses or losing trades. So that's another great advantage to using this as well. Remember, extremely important, this is an entry technique only. As I stated earlier, one of the common mistakes most of our students make is when they see this, their eyes get wide open and they say, boy, I'm going to start trading this tomorrow. And when they think there's a buy, they start applying it. And I tell them, I say, listen, this is not a strategy. Just because you think you should buy something and you place an entry 1 or 2 ticks above, it has to be based off of a strategy that is something you've researched or something you've been trading for a while that you feel comfortable with. You can't just buy and say, well, I'll buy above this bar. You know, based on what? Just based on your own discretion? I mean, you have to have a little bit more structure. So this is not a strategy. It's simply a technique to add or to alter your current strategy. All right? Our goal is simply to increase your odds for a successful trade. But remember, there is no guarantee for winning trades. So, as we conclude here, before you ask me questions, I'd like to ask you one, and please answer honestly. Do you think this tool could have helped your trading this past year? All right, go back and look at your last 10 or 20 trades, most especially the ones you lost. If you had applied this, could it have kept you out of trouble or maybe gotten you in at a better price? Now, we have a great offer for all the attendees today. We're going to offer you our confirmation tool on a 30-day trial of the PTS Primo Charting platform. $7 gets you all of these different benefits from applying our charting platform along with the confirmation, automatic confirmation signals. You're going to get the new confirmation tool that's automatically, one-click access away on our platform. You're also going to get another tool, which I've talked about in Saturday webinars. It's our Strength of Trend feature. This is a great tool I designed with Pro Trader Strategies that once you're in a trade, have you ever been in these trades where, boy, it just keeps going in your direction and you have a really huge profit, but you're not sure how long you should stay in this trade? Is the momentum running out of gas or is there still some strength left? Well, this is a great feature that will tell you with high probability that either there's still strength left in the move or if it's running out of steam. You're also going to get our enhanced buy-sell line feature. This is one of our greatest tools we have. It's our proprietary buy-sell line. There are 4 different ways of using this, and this automatically tells you the overall trend. It tells you whether you should be a buyer or a seller. It gives you that bias. We also have some pattern recognition features, a short-term trend pattern feature that tells you the short-term trend simply based on pattern recognition. We also have over 90 of the most prominent technical indicators if you want to tinker under the hood and experiment with. Now, we know we have a technical bias. We have a slant towards relying on technical information. I know that because I'm a technician at heart, and I really just listen to the market. But we're not telling anyone. Remember, our goal is not to tell you how to trade or how not to trade. Our goal is simply to educate you. And if you feel that fundamental analysis is a huge part of your trading, well, then that's great. So this is why we are supplying you with free Bloomberg TV. And this is something that comes automatically on our platform. We have a media page where all you have to do is simply click on the icon and you get live Bloomberg TV. Any fundamental information you're interested in, any economic report or earnings report, you'll hear it live while you're looking at the charts. You'll have a separate page that has live Bloomberg TV where any interviews are taking place or analysis you can watch as it's happening. And then lastly, we have great tech support. So this is all yours for only $7. I mean, this is over 4 decades of information I've accumulated from trading in my own personal trading that we have at 1 click away access for you to access at any time you want. Plus, we have great tech support. And in addition to this, you have my personal email address where you can email me anytime with any questions on any particular technique or method that you're interested in using on the platform. So I'll be there with you every step of the way, okay? Here's how to take advantage of this great Saturday offer. This is our $7 offer to become a member of our platform. It's to contact Pro Trader Strategies. I designed the platform with them. They handle all the tech support and all the discounting of the pricing. You can either email them or I would suggest calling them directly if you have any questions about the platform at 310-598-6677. But for $7 for 1 month's use, I don't think you should have that many detailed questions because $7, you're probably going to spend more than that just on going to lunch this afternoon, on a Saturday afternoon, or even going to breakfast. But here you get not just 1 day of enjoyment, you're going to get 30 days of things that have taken me over 4 decades to accumulate. Now the link you see at the very bottom is the link that will take you to the online sign-up page, and there's more information about the platform on that. We posted on the chat box on the GoToWebinar column there a live link because the link on the screen is not live, I believe. So don't worry if you don't have to copy and paste that. You can just simply go to the chat box in the right-hand corner and just click on the link, and it will automatically take you to the sign-up page, okay? All right, so I promised you I would answer any questions. We have about 5 or 10 minutes left. If you're interested in this, by all means, sign up for this. You can call. If you don't want to do it online, you can call Pro Trader Strategies right now. They have trading consultants manning the phones. If once again you're kind of on the sidelines wondering, well, please, I mean, I totally understand that, but that's why we discounted this price tremendously. I believe The standard cost, if someone is asking, what is the price after the 30-day trial? The standard cost goes for $97 a month, which is still extremely inexpensive. I know there are some platforms out there that are charging $200, $300 a month. So $97 is still a very inexpensive price. But remember, you're under no obligation to do that. Simply cancel and say you're not interested, and you'll only be charged the $7. That's it. You know, it's just yours for $7. And even if you decide, someone is asking, am I locked into a long-term deal with this if I decide to go? No, you can always cancel whenever you'd like, unless you do decide to purchase for a year, and then you'll get a discount even greater because you're locking in for a longer term. So everything is negotiable. The trading consultants at Pro Trader Strategies would be happy to work with you if you want to go for a longer time frame. Okay, so it's entirely up to you. But remember, once again, this is just for 30 days. There's no obligation after that. Simply say that you're not interested, and the cost is only $7. All right. A lot of traders are asking, what do I do if I trade through another platform? Well, trust me, I do the same thing. I trade through TradeStation, and so what I do is I toggle back and forth. I enter my trades in TradeStation, but what I do is for signals and for analysis and for looking at all the different things that I have it one click away, I just toggle back and look at my my platform, my PTS Primo Charting platform. And then when a setup occurs, I'll go and just simply enter it via the other platform. It's that simple. Most traders are looking at 2, sometimes 3 platforms at a time. So this way you can just toggle back and forth. It's really, really simple. And once again, I've always had a pet peeve with platforms in the past. As I said earlier, I've been trading for 4 decades, and I've started, long ago when there was no such thing as a personal platform. No one even had them. I was one of the very first day traders to be trading from my personal office. So I know what it's like, and I've experienced all of them, and I know personally which ones I like and which ones I don't. There is no bias here when I tell you this is the simplest platform to maneuver and to access charts and scanning capabilities and all the techniques. I specifically designed it with Pro Trader Strategies to make it simple. Everything is one click away, and it's right there at your fingertips. There's no boxes you have to open up and then edit and then go to another box and find out. And then, half hour later, you finally got a chart loaded. Most of the applications we have take less than 10 or 15 seconds to have complete. It's right there at your fingertips. So try it for a month, for 30 days, $7. Trust me, if you're going to get coffee this morning, it'll probably cost you more than that at some places. $7 for 30 days of information that's taken me over 4 decades to accumulate. And I really feel you'll really be happy with the results you get. And once again, you'll get my personal email address, and you can contact me whenever you like with any questions, okay? So take advantage of this great offer. Don't sit on it because it might go back up to $97. Pro Trader Strategies handles all of the pricing, and for all I know, they may say that $7 offer is over, so we're going back up to $97, or maybe they'll charge you $47, who knows? You don't want to miss this great opportunity. $7, you can't go wrong with that price, okay? As we conclude here, I hope you learned a little bit today, and remember, we're all about educating you, and I hope you saw our attention to really trying to educate you, because that's what it's all about. There's enough for everyone to go around, so there's no harm in giving everyone and teaching everyone the techniques that I've accumulated, because there's profits for everyone. We just simply want everyone to be a consistent trader. Thank you so much for attending. I hope you have a great weekend, and I hope that you all become members of the PTS Primo Charting platform. I'll see you next week. Bye-bye.